everyone, my name is Anand Sharma and I am the fund manager of Tata Flexi Cap Fund. First and foremost, what could be the benefit of a Flexi Cap category fund? As the name itself suggests, the fund gives flexibility to invest across large, mid and small caps and toggle weights depending on the market environment and the economic outlook while aiming to effectively manage the risk and return profile of the portfolio. There may be times when the fund could have a higher tilt towards large cap, while there could also be times when the fund could even have a higher proportion towards mid and small caps, and this is where the flexibility comes into play. At this point of time, the Tata Flexi Cap has a slightly higher bias towards large cap names, while also increasing some allocation towards select small caps based on the valuation and growth outlook over the next few years. The fund has also used the recent correction in the markets to increase the net equity levels. We believe that some of the sectors which have been adversely affected following the recent geopolitical crisis could potentially offer a good opportunity to increase allocation from a medium to long-term perspective. The overall fund structure is to divide the portfolio into essentially two parts and follow a core and satellite approach. A large part of the portfolio, called the core, will be focused on businesses which can be bought and held for a longer time duration and where there can be reasonable earnings growth at reasonable valuations. The second part of the portfolio will try and focus on mispricing across various stocks and sectors and will try to capture this through risk-weighted allocation. This part of the portfolio is expected to be very tactical, nimble, and will try to switch across sectors and stocks as and when the investment objectives are met. As far as 2026 is concerned, the start of the calendar year has been quite volatile with a wide mix of events which include the India-US trade deal, the India-Europe trade agreements, and of course the recent crisis in the Middle East, which has caused a lot of volatility in the markets. From an Indian perspective, while we may be impacted in the near term because of high oil prices, the Indian macros today are in a far better condition compared to the past, which gives us comfort that over the medium term, we could still be able to grow at a reasonable rate. We like many of the domestic-oriented sectors at this point in time, which may participate in the economic growth of the country over the next few years, and we also like select sectors which can participate in export-related manufacturing opportunities that are likely to arise over the medium term. Sectors which the fund likes at this point of time would be power demand, which we believe is a structural theme for the medium to long term, large banks which continue to gain share and can also benefit from an overall pickup in credit growth, select auto ancillaries which can benefit from export-related opportunities that could arise post the trade deals, life insurance, cement, which has gone through a period of consolidation and is ripe for profitable growth over the next few years, telecom, which is also a quasi-consumption play and where growth and valuations remain reasonable. From a risk perspective, if there is any delay in economic growth or if the geopolitical crisis continues for a longer period of time, some of the sectors we spoke about could face a slowdown, and since the fund would have some exposure towards mid and small caps, it could be subject to some amount of volatility. The fund would be a suitable vehicle for any investor with a medium to long-term viewpoint. Thank you for watching and stay invested.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.